Welcome to the FinGlimpse podcast, where we analyze the world of business, finance, and the economy. We cover the latest market news, economic trends, and some interesting businesses. As a standard disclaimer, this podcast is for informational purposes only and should not be considered investment advice. Always do your own research. Now, let's get started.
Imagine this. AI boosting productivity across an entire industry, maybe by nearly half, in just 5 years.
Yeah, it sounds like science fiction almost.
Right, but it's the real projection for generative AI's impact on IT. I mean, this isn't just speeding things up a little.
No, it's fundamentally changing how work gets done, redefining it.
Okay, so let's unpack this. Today, we're doing a deep dive into Persistent Systems. They're an Indian IT services company.
And they're really interesting because they're not just, reacting to this AI-first future. They seem to be actively leading it.
Exactly. And our guide for this dive is a pretty comprehensive initiating coverage report. It's from Centrum Institutional Research, dated June 30, 2025.
A very fresh perspective, then.
Yeah, so our mission today, cut through the detail, pull out the key insights, and basically give you a shortcut to understanding this company.
And not just the company, right? But also the bigger trends it represents for, businesses everywhere. What's really fascinating, I think, is how these huge macro trends in global IT, how they really set the scene for how individual companies are doing. I mean, just look at the India IT industry itself. It's colossal.
Colossal is the right word. What are the numbers again?
We're talking something like $280 billion in revenue last fiscal year, FY25. That's contributing, 7.3% to India's GDP? And employing over 5.8 million people. It's moved so far beyond just, low-cost maintenance work.
It really has. It's driving global digital transformation now.
Absolutely.
And that growth, it's coming from two sides now, isn't it? Exports are massive, over $200 billion.
Right.
But the domestic market inside India, that's growing even faster lately.
Yeah, it's actually outpacing export growth in recent quarters, which is quite a shift.
Yeah.
India's dominance is just undeniable. They hold, I think, an 18% share of the global IT outsourcing market now.
Up from 13% just back in FY16. That's significant.
It is.
So if it's not just about being the low-cost option anymore, what's the strategic edge for companies like Persistent? How do they compete now?
That's the key question, isn't it? And this growth is being supercharged by three big interconnected tech forces reshaping everything.
Okay, what are they?
First, generative AI. GenAI, that's the big disruptor.
Yeah.
That projected 43–45% productivity gain we mentioned. That forces companies to pivot.
From just doing the work?
To being real strategic AI partners with their clients. It's a whole different relationship.
Okay, that makes sense. What's number two?
Cloud. It's just the foundation now, the default layer for anything modern in IT. Cloud services make up roughly 40% of new deals.
40%, got it. And the third?
Cybersecurity. It's not just an IT issue buried in a department anymore.
No, it's a boardroom conversation.
Exactly. It's a major business risk, and that's driving huge demand. And it's non-discretionary spending. You have to do it.
Right. These aren't just optional trends, they're necessities.
Precisely. They're shaping every company's digital path forward.
Okay, that's really powerful context. So with all that going on, what does the report say about the overall IT services sector outlook?
Well, it's generally stable, but maybe a bit of muted growth expected for FY26, something like 4–6% year over year in US dollars.
Okay, so not explosive growth across the board. What about margins?
Operating margins look broadly steady at the industry level for FY26, hovering around, say, 17% EBITDA.
Right, EBITDA, earnings before interest, taxes, depreciation, and amortization, a key profitability measure.
Yep, and we're also seeing maybe less aggressive hiring, fresh hiring being subdued, and attrition levels are moderating, maybe settling around 12–15%.
Okay, so it's interesting how that relatively, let's say, calm industry forecast really highlights a company like Persistent Systems.
Yeah, it makes their performance stand out even more.
They're positioned as this global leader in digital engineering, enterprise modernization. They've really evolved, haven't they? From a niche player to a full-stack provider.
They really have.
Yeah.
And the growth has been incredibly strong, very consistent. They hit $1.4 billion in annual revenue in FY25.
And that CAGR, the compound annual growth rate between FY21 and FY25,
was 25.6%, which is, pretty impressive.
Very impressive. And now they're pivoting hard towards this AI-first approach. platform-driven solutions.
Which I think raises that important question you touched on earlier. How does a company post such strong numbers, so strong projections, when the broader industry outlook is kind of muted?
Yeah, exactly. And Centrum, the research firm, they seem confident. They initiated coverage with a BUY rating.
Right. With a target price of $7,245 per share, that implies about a 20% return based on their forecast.
And they're projecting really strong growth for Persistent, specifically. Revenue, EBITDA, and PAT profit after tax expected to grow at CAGRs of, what was it?
21.1% for revenue, 24.6% for EBITDA, and 25.5% for PAT. That's over the period FY25 to FY28.
That's quite a projection.
It's a very strong vote of confidence, and it seems rooted in the strategic choices they're making, especially around AI.
Yeah, it really does seem to tie back directly to that AI-first strategy and their platform approach. That seems to be the core of it.
Absolutely. They're clearly positioning themselves right at the front of this AI, this generative AI wave.
Yeah.
It explains a lot about that strong outlook.
So how are they doing that? What's the strategy look like?
Well, they've got this dual AI strategy. There's AI for technology, which is about using AI internally, making their own software development faster, more productive.
Okay, boosting their own engine.
Exactly.
Yeah.
And then there's AI for business. That's about using AI to deliver real, tangible value to their clients.
And they're using proprietary platforms to do this.
Yes, that's key. They've built some powerful ones.
Like SASVA, I saw that mentioned. What does that do?
Right. SASVA stands for Secure, Accountable, Scalable, Verifiable, and Accessible GenAI Deployments.
Okay, that's a mouthful, but the key words sound important.
Yeah.
Secure, verifiable.
Exactly. It's not just about being fast with AI. It's about trust, reliability, governance. Think about a big bank, right? They need AI that meets strict regulations. SASVA gives them that verifiable, accountable framework.
So it turns the cutting-edge tech into something dependable for business.
Precisely.
Yeah.
It helps accelerate software development, but also delivers that business value. It's designed end-to-end for product teams, devs, business leaders.
Makes sense. And SASVA isn't the only one.
No, they also have iAURA. That's more of a data management suite. Uses AI and machine learning for things like automating data migrations, reconciliation, ensuring data quality, governance, all that critical data plumbing.
Okay.
And then there's the GenAI Hub. That one lets companies quickly build, test, deploy, and monitor GenAI apps using lots of different large language models, LLMs, and various cloud platforms. Gives them flexibility.
So with this whole AI-first push, where are they really differentiating themselves? Is it the tech itself, the platforms,
Right.
or the people?
Well, that's where it gets really interesting. I think it's a combination. Persistent made early bets on reusable IP, intellectual property, and crucially, on skilling up their workforce massively.
How many people have they trained?
Over 4,000 engineers, specifically in AML. That includes really specialized roles like prompt engineers, model trainers, stuff you didn't hear about much a few years ago.
Yeah.
And this strategic positioning, it makes their AI solutions feel almost non-discretionary for clients. Even if budgets are tight elsewhere, companies feel they have to invest in this stuff to keep up.
So it protects them a bit from spending slowdowns?
To some extent, yes. And we're seeing the proof in early client wins. They're actually monetizing this potential already.
Like where? What kind of examples?
Well, in BFSI banking, financial services, insurance, they're using intelligent co-pilots for contact center agents, for AML investigators.
AML is anti-money laundering.
Correct. Making those processes smarter, faster. In healthcare, they're using GenAI to summarize patient data. Think of the time savings for clinicians.
Huge potential there.
And in the tech sector, they're providing AI-assisted tools for the whole software development lifecycle, the SDLC, improving DevOps, automating quality assurance. It's not just talk, it's deployed and delivering value now.
That's impressive. But, it's not just an AI story, right? Persistent success seems built on really strong traditional growth engines, too.
Oh, absolutely. The AI focus is critical for the future, but their foundation is solid. That 25.6% revenue CAGR over 4 years, FY21, FY25,
Right.
that massively outpaces the industry average.
And their deal pipeline looks healthy.
Very. Total contract value, TCV, was around $2.1 billion in FY25. Annual contract value, ACV, about $1.4 billion. It shows steady demand.
And they're still projecting strong growth going forward.
Yeah, around a 21% CAGR for revenue over FY25-28. And management has this aspiration, this goal, to hit a $2 billion annual revenue run rate by FY27.
Which is ambitious, certainly.
It is, especially in this market, but it's built on a revenue base that's become much more diversified, which really helps manage risk.
How so? Less reliance on top clients.
Exactly. Their top 5 clients used to be nearly 45% of revenue back in FY20. Now it's down to about 32.7% in FY25, much less concentration risk there.
And the industry mix.
It's pretty balanced. BFSI is around 32%, healthcare and life sciences about 27%, and then technology companies and emerging verticals make up the rest, roughly 41%.
Geographically, still mostly North America.
Yeah, North America is the biggest market at about 80.5%, but Europe around 8.4% and India itself at 9.3% are showing good growth momentum.
And they're doing most of the work from India.
Overwhelmingly. About 85.2% offshore delivery from India. That's very cost efficient.
Okay. And you mentioned acquisitions earlier. How does that fit into the picture?
Yeah, if we connect this back to the bigger strategy, their M&A approach is really disciplined. They focus on what they call tuck-in acquisitions.
Meaning smaller strategic buys.
Exactly. It's not about just buying revenue. It's about adding specific tech skills or deepening their expertise in a certain industry vertical.
Any recent example?
Sure. In FY25 alone, they bought Arrka Infosec that adds capability in privacy and AI governance. Very timely. They picked up assets from SoHo Dragon to boost their BFSI, banking and finance offerings, and acquired Starfish Associates for AI-powered contact center solutions.
So targeted additions.
Very targeted. That Starfish deal, for instance, it filled a specific gap they had in AI for contact centers, addressing a clear client need that's growing fast. They've done, I think, 19 acquisitions overall.
19, wow.
Yeah, and they expect this inorganic growth, the acquisitions, to contribute maybe 2% to that CAGR over the next few years, helping them reach that $2 billion target. It really shows how they're strategically adding pieces to compete effectively.
Okay, so strategic growth, diversification, smart acquisitions. That's clearly backed up by strong operations and financials, too, based on the report.
Absolutely. Their EBITDA margins are consistently near 17%. And EBIT margins are expected to climb towards 16.6% by FY28.
What's driving that margin improvement?
A few things. Better utilization of their people that hit around 88.1% in the last quarter of FY25. Optimizing subcontracting costs, often by shifting work offshore. Streamlining their SG&A costs, selling general and admin expenses. Plus some normalization of things like ESOP costs.
Are there any headwinds on margins?
Minor ones. Things like annual wage hikes, maybe some initial costs for setting up on-site delivery for very large deals. But overall, they seem to be managing margin levers quite well.
And what about the people metrics? Headcount growth? Productivity?
Headcount grew a lot, about 80% between FY21 and FY25, went from around 13,700 people to nearly 24,600. But crucially, that aligns well with the revenue growth.
So they're not just adding bodies.
No. And productivity shows that. Revenue per employee jumped significantly from about $3 million to nearly $4.9 million over that same period. That's a strong gain.
And attrition, always a big topic in IT services.
It's quite moderate in FY25, around 12.9%. And the expectation is it'll stay in that kind of stable range, maybe 12-15%.
You know, that moderate attrition figure, it actually says a lot.
It does, right? In an industry known for churn, keeping attrition relatively low suggests a strong culture, good talent management. That's often an underrated factor in sustaining growth.
Definitely. And the overall financial health looks pretty robust, too.
Very solid. Key return ratios are improving nicely. ROCE, return on capital employed, went from under 24% in FY22 up to over 29% in FY25. Expected to hit nearly 33% by FY28.
That shows efficient use of capital. And
similar story for return on equity, improved from about 22.4% to nearly 25% by FY25, projected to reach almost 28% by FY28.
And they're doing this without debt.
Yep, remains a debt-free company. They actually have a cash surplus position, very healthy balance sheet.
And returning cash to shareholders.
Consistently, they have a stable dividend policy. The absolute payout has grown significantly from about $1 billion in FY21 to over $4.6 billion in FY25. The payout ratio is around 30-35% of profits.
Okay. And managing cash flow well. Working capital.
Seems so. Their billed DSOs, day sales, outstanding. Basically how fast they get paid. We're at a healthy 58 days in Q4 FY25. It all paints a picture of a very well-run financial ship.
It really does. Now, finally, we can't really discuss persistent systems without talking about the leadership, can we?
No, definitely not. It starts with the founder, Dr. Anand Deshpande. He's still chairman and managing director.
Founded it way back in 1990 with very little capital, right?
Yeah. Just 2 lakh, the story goes. He has a PhD in computer science from Indiana University, IIT Kharagpur background. Very strong technical roots.
And he's still involved strategically.
Very much so, apparently. Involved in the long-term strategy, nurturing that innovation culture. It's quite rare to have that founder-led continuity combined with deep tech expertise.
But it's not just him running the show day to day.
No, they have professionalized execution. Sandeep Kalra took over as CEO in 2019, and under his leadership, revenue scaled dramatically from around $470 million in FY20 to that $1.4 billion plus in FY25.
That's a significant scaling period.
It really is.
Yeah.
And they brought in Vinit Teradesai as CFO in FY25, adding more financial stewardship expertise. The whole management team seems to strike a good balance between driving growth, managing capital smartly, and pushing innovation.
Their ability to attract and keep that caliber of leadership probably says something too.
I think it definitely does. It suggests confidence in the company's direction and future.
Okay, so let's try and wrap this up. To recap, Persistent Systems really emerges from this analysis as a standout performer in Indian IT.
Yeah, clearly strategically positioned right at the cutting edge of the AI revolution.
Demonstrating really consistent, impressive growth backed by solid financials.
And guided by what seems like very visionary yet grounded leadership.
So for you listening, understanding a company like Persistent, it really offers insights, doesn't it, into where digital transformation is heading.
Absolutely. And the growing role AI is playing and will play in driving real business value across the globe.
So maybe a final thought to leave you with, considering how fast AI and digital engineering are evolving, what other industries, what business functions do you think are next in line? Where will we see the next profound sort of non-discretionary transformation like we're seeing now in IT services?
That's a great question to ponder. Food for thought.
That's all for this episode of the FinGlimpse podcast. If you found our discussion insightful, please consider subscribing and leaving a review. We'd love to hear your thoughts and suggestions for future topics. Until next time, stay informed and make smart decisions. Goodbye.